Does anybody here know the difference between an introvert accountant and an extrovert accountant? Actually, nobody knows. Got to think about that for a minute. I am truly honored to be here. I have to admit it's a lot easier writing what I write in the safety of my office than standing up in front of a crowd and saying similar things. But I'm going to say things that I have written and will continue to write about because I believe our profession is in desperate need of change. Not hope and change, but real change. Reform in virtually all areas of what we do. Now, that's no way to build a relationship, but that's not why I'm here. I'm here to charge up and to get you to engage in introspection. Thank you, Mark, for the honor of being here. I'm a little perplexed when I read the background in the agenda. It said I'm erudite. Does anybody know what that means? I had to look it up, and I don't think it's me. But anyway, I'll take it. I want to offer a disclaimer. The views I am about to express do not represent the opinions of the University of Colorado at Colorado Springs, Accounting Today, or NASBA. In fact, there are lots of times my views do not reflect the opinions of anyone else on the face of the earth. My main message to you is encouragement. You are on the front line. You have authority. I encourage you to exercise it with great diligence, careful thoughtfulness. I think many people in the profession do not understand exactly how much authority you have and how important you are. CPA behavior is incredibly important to the quality of our product, and it is your duty to define what constitutes suitable behavior and to act accordingly when it does not occur. Your influence is even greater in my area of interest, financial reporting, because you decide which standards are going to be applied. Many have forgotten that point, I believe, and your significance. And I'm going to talk to you, as it says, about two main issues that we have today. In the first case, I think people have mostly ignored you in the authority that you have, and I think we have been buried in propaganda. Propaganda is not necessarily evil by nature, but it is one-sided. And so I want to penetrate that curtain for you today. In the second case, I think many of the same people have assumed you will agree with them. And I'm going to raise some questions on that and try to get you to assert your power appropriately. And I certainly do intend to give you new insights. It's been several decades since I've actually had a bubble popped and discovered that financial reporting standards are set by a political process. As a young undergrad, I was excited. Wow, last, something logical I can understand. But as I began to mature and as I spent time at the highest levels, working at the FASB and the Office of the Chief Accountant, it became incredibly clear that it is politics that shape how reporting standards are produced and how indeed they are enforced. And I remain astounded that so few people in the profession understand that point. A very special example came across in email not too long ago. Hans Hogevorst of the IASB, the chair, described in a speech in the Netherlands his education in the politics of standard setting, and he says at one point, and I quote, "I must admit that I may have been a bit naive." That's not a very good admission for a chair of a board to admit that he was unaware of the extent of the politics, but I know you are in the same boat in many respects. So here's a definition of the word. You've got it. Politics is the exercise of power by people in responsible positions in pursuit of their self-interest to the detriment of the public interest they are supposed to protect. That comes from the MUD. That's Miller's Unpublished Dictionary. What this definition points out is that each of us is victimized by the kind of politics that exists in virtually every part of our life. A very important negative result is that we have to spend time in self-defense, and this is stressful, it wastes resources, it makes us unproductive. This sort of political behavior that is described there for you is such that we are unable to fully trust and rely on our leaders. If we are leaders, we need to realize that others feel that way toward us. So what I want to do today, a couple of things, is help you identify when political behavior is happening so you're less likely to be a victim. And because of your nature, the nature of your responsibilities, I urge you to stop and consider whether you have been acting as a victimizer and taking advantage of others. Now, what are accounting standards? In my mind, standards are officially supported minimums. In my community's vernacular, academia, just meeting a minimum expectation produces only a passing grade, a D, perhaps a C minus. When it comes to accounting, I believe most managers and accountants don't treat standards as minimums, but treat them as maximums, as the most they have to do. And they see them not as a floor, but a ceiling. As an example, FASB Statement 123, when it first came out, said you really ought to put that options expense on the income statement. But if you don't want to, you don't have to. Approximately 103% of all financial statements had the expense in the footnote. What route did they choose? Minimum compliance. As time passed and something called Enron happened, some managements began to reconsider. They wanted to prove their trustworthiness, reduce uncertainty, and they went beyond the minimum by recognizing the expense and otherwise helping users understand what had happened. There weren't many, but there were 500 among public companies, including the two generals. They made that choice before it became mandatory, and as a result, I give them an A, where the others got C minus. But what do you think the capital markets believe about minimizers, and how do they respond? I'm sure it's the same way that I treat students who make Cs. They get my full respect, and I give them encouragement. But if they want a good letter for a job, if they want a good letter for a grad school, I encourage them to go somewhere else. Thank you. I had Art Wyatt, some of you know that name, come speak in Colorado Springs, and we were in a ballroom similar to this, and he got up to talk, and immediately next door, a Dixieland band began to play. It was a sales meeting. He talked for 25 minutes, came, sat down next to me, and I said, Art, I'm really terribly sorry about the band. And he looked at me dead serious and said, what band? It's him to block things out. Minimum reporting has consequences. Minimum reporting leads to maximum uncertainty. Maximum uncertainty leads to maximum risk, which means investors and creditors demand the maximum rate of return. If you think about it, that means management is going to pay the maximum cost of capital and minimize the company's stock value. Those who report the least cannot expect to receive the same rewards as those who report the most. And this economic truth applies to both public and private companies. Those who provide maximum disclosure are treated differently. They have provided more complete information and will then reduce uncertainty. That reduced uncertainty will reduce risk, and that will make investors and creditors satisfied with a lower rate of return, which means management has a lower cost of capital and a higher firm valuation. That's true in public companies, it's true in private. When I see people apply political effort to produce less demanding accounting standards, I simply have to conclude they do not know what they're doing. Because you produce pressure to produce lower standards, which you then follow at a minimum level, means you're going to have a higher cost of capital and a lower stock price. So how does politics affect standard setting? Surprise, all generally accepted accounting principles are political. I hope you know that, but trust me, they are. Uninformed novices and others think the rules are good, that when we report earnings per share, that we have provided a reliable measure of earnings per share. Not so. They're convinced that all accountants and managers are trustworthy, that we all tell the truth at all times. Their confidence, unfortunately, is not justified. GAAP are compromised and inadequate, and furthermore, people take shortcuts when they implement them. Those who understand our situation should not be content with the status quo. It's unethical, I believe, for us to report as we do. And I had a great experience. I used to teach ethics until I found out there was, I had too many papers and they didn't want to do it. But I had one student who asked every guest speaker, is it possible to be ethical and comply with GAAP? Every speaker said, I don't understand your question at all. Ethics requires truth-telling. Does GAAP lead to truth-telling? I don't believe it does. And why? Ever since standard setting entered the modern era with the SEC, we've had conflict among 4 groups. The purpose of financial reporting is to serve the public interest. If you don't believe that, then why are you sitting on a board? Have I got you? How many of you are there because you enjoy the pay and the perks? I'm shocked. I'm shocked. We exist to serve the public interest. Everything we do should support the public interest. What is the public interest? Improve the economy. How do we improve the economy? By improving the capital markets. But what do we have? We have a system that involves 4 other players. We have managers who report to statement users. Most managers are inclined to use financial reporting, to use an erudite term, produce positive financial images. To put it in English, they want to look good. Even if that means they don't tell the truth, they stretch the truth, they shave the truth, or they hide the truth. We even have a term for it called off-balance sheet financing. Near as I can tell, that's lying. But what do I know? A lot. What do users want? They need to support their decisions. Everybody's better off when they make better decisions. The markets are more competitive, the economy is boosted. Users have chosen, by and large, with some great exceptions, to stay out of the political process. We have, next, auditors, who were brought in simply for the purpose of letting us know and perhaps preventing it whenever managers step out of bounds or put their fingers down across the end zone, if you saw the replays last night. They're there to create more trust. But oftentimes what we find is they forget their public duty and want to be safe themselves against recrimination. Another point that I believe will be, addressed is this one, that to the outside world is immediately obvious as a conflict. That arrow is green. It's the flow of money from managers to auditors. I believe it creates an untenable pressure because auditors are supposed to be watchdogs for the public, but they have clients that they have to serve or they will lose them. I think this should make many people uncomfortable, and certainly the concern with rotation is an outgrowth of this very issue. On the fourth hand, I'm not talking two hands, I'm talking bridge, we also have regulators that are brought into play to create and implement, enforce standards. Their objective is to create confidence in the markets. Not all of them are fully committed to that goal. Present company excluded, I hope. So what do we have? We have a mess. And it isn't just reflected in GAAP. We have some others. You've all heard of cleverly rigged accounting principles, yes? What have I got, a bunch of introvert accountants? What about PEEP? FASB could not muster enough power some 15, nearly 20 years ago to force managers to put unrealized gains and losses on their income statements, so they said, go ahead, put them on the balance sheet. FASB, some 30 years ago, almost, could not get enough political power to force management to report actual returns on pension funds and include the actual returns in pension expense. They get to report what they expected to earn. I wish I could spend what I expect to earn, don't you? On the face of it, it does not make any sense at all. So what do we have? Those are both examples of PEEP, politically expedient accounting principles. What's this YWAP? FASB in the mid-'80s attacked the cash flow statement. At the very last minute, Dave Masso voted against what had been the consensus all along, and they could not then get a mandate to require the direct method of reporting operating cash flow. The board said, you really ought to do it, but you don't have to. FASB, as I mentioned, had a similar tack when it came to options. So YWAP means whatever you want, accounting principles. And my favorite is POOP in the context of this acronym. How many of you know how long certain of our principles have been in place? For example, inventory accounting, your FIFO, LIFO, average, whatever, dates to 1946. As a matter of full disclosure, so do I. I'm old, and that accounting principle is old. Accounting for treasury stock dates to 1933, before anyone ever thought of billions and billions being spent on stock buybacks. The most inexcusable practice of them all, supported by credible evidence, says systematic depreciation has been practiced in America dating back to, and I have a drum roll please, get active, when Andy Jackson was president. That should be astounding. Astounding. The reason it was adopted was because people said it's too expensive to do appraisals. Now, the last time I looked, that's about 180 years ago. Surely we've gotten better at it since then. And so what is POOP? Pitifully old and obsolete principles. There are these and many other shortcomings because there is a political process that has forgotten the public interest. Now, the effects of standards are not, of politics are not restricted only to standards. We have other kinds of ethical challenges going on, and I want you to now sit up and listen as I talk about a couple of other issues relating to IFRS in the United States, and then an effort that has built up some steam, private company standards. They both have major implications. I'm sure they've been discussed in your board meetings and outside. I want to give you some insight into them and encourage you. And you'll see with my subtitle up there what I want to say. Now, I, as much as anybody, would love to see and love to embrace implementation of the hypothetical idea that a single set of standards could be imposed. If obstacles could be overcome, there would be only one set to learn and apply everywhere. And it would also be great, I believe, if we applied those standards and achieved true comparability. Comparability being defined as reporting similar things similarly and dissimilar things dissimilarly. But reality is quite different from that. And frankly, I'm baffled that so many people have bought into what is a rosy vision. Keep in mind, I love the vision, but I also acknowledge that it's rosy. How's that for an accounting prof saying? It's great in theory, but it won't work in practice. And I want to point out, and I put a red box there to get your attention, the real issue has been not the one that has been talked about, should we use IFRS or not. The real issue that the SEC had to debate was the choice of whether FASB or the International Board, as it exists now, will do a better job of achieving progress in financial reporting for public companies. It was, in fact, a debate about the standard-setting system, not the standards that are in place. And the issue is which of those systems is more capable of promoting telling the truth and advancing, pay attention to this, American interests. And those choices are much more complicated and well beyond the realm of accountants. So I do congratulate whoever was head of NASBA in 2009 because they replied to the SEC's request for comment on the roadmap. And their letter explained one drawback, and that it would divide the profession into two parts, those who knew international standards and those that did not. Another example, though, of problems that people have dismissed is that I've seen numbers ranging from 100 to 150 that many other countries have already adopted IFRS. Therefore, we better adopt or we're going to be left out. The International Board has taken that tack and has begun to interfere with our domestic politics by chastising the SEC regularly for not adopting. It is still doing so. They've made threats. We would lose seats on the board. We'd be left out. We couldn't shape future standards. All the while, these people are accepting large donations from management of American corporations and accounting firms. Another high-sounding claim about IFRS is that they're principles-based, not rules-based. That idea sounds terrifically good to an academic, but in fact, it's not so good. We watched 2002. I think I was distracted at the time. FASB and the International Board entered into an agreement, the Norwalk Agreement, and wrote a memo of understanding a mere 50 days later. This was a stunning idea of friendly cooperation overseas, and it was completely oversold. Finally, almost everybody that commented on this big issues seemed to think the change would be as simple as persuading 3 out of 5 SEC commissioners to vote aye. It's how hard could that be, they thought. A whole lot harder than anybody ever thought. So I want to go over these things in a little more detail. You, of all people, surely realize that standards can actually improve practice only in the context of a strong regulatory system. What good does it do to have standards if no agency is empowered to investigate to determine whether they have been complied with? What good is it if no agency is given jurisdiction and empowered to sanction those who don't comply? What good are standards for protecting investors if those investors have no recourse to recover damages in a legitimate justice system? So in summary, it turns out these protections generally do not exist outside the U.S. to the same extent they do here, and a citizen of the U.S. would have great difficulty gaining access to recourse if such systems existed. The obvious conclusion is that international standards at this time, and for a very long time, I believe, just won't work until the rest of the world catches up to our infinitely efficient regulatory system in the United States. What about comparability? It's far more complicated than uniformity. This was a notion that I kind of uncovered myself more than 30 years ago. Comparability is not produced when everybody complies with bad standards. You got it? What do we do with R&D? Write it off, whether you spend a nickel or 50 billion. It's written off. Everybody's done the same thing. Are the results comparable? Absolutely not. We don't even have uniform standards, under our standards, we do not have uniform compliance because of YWAP, PEEP, and POOP. Our standards are political, they're obsolete, and they're full of discretionary choices. People are in compliance with GAAP, yet they do not produce comparable financial statements. To say simply that all we need are international standards and therefore we have comparability is a pipe dream. Galen used an expression like this when he testified at the SEC or spoke at a roundtable. He said, "It's like a beauty contestant's hope to rid the world of hunger, war, crime, and disease." You can't argue with it as a vision, and we need to hold on to it, but we're not there. And it was politics that rose it to the highest level. There's discussion of a landslide. Everybody doing it except us. That's illusory. Why? We have carve-outs. It surely would be true in the U.S. if we were to adopt IFRS, which we cannot, but let's suppose we could. What about LIFO? LIFO is not permitted under IFRS. Suppose the SEC said, okay, it's not permitted then in the United States. Does anybody here have any idea how many billions of tax liabilities that would immediately create? The SEC does not have authority to raise taxes. In fact, Congress handcuffed any standard setters back in 1939 when they adopted LIFO but imposed the conformity rule. So there is no good reason, listen to this, no good reason to rush to join a unified community that doesn't exist. People out there do not all use IFRS, and we should not choose to go there. The only reason anybody claims IFRS are principles-based is because the only kind of consensus ISB members are able to produce are agreements in principle. Imagine, if you would, the two sides in a labor dispute meeting outside with the cameras rolling. Oh, we both agree there shouldn't be a strike. But get inside the closed room, that agreement in principle is often non-existent. Think about a standard that requires capitalization of a lease that lasts for a substantial portion of the underlying property's useful life. Very difficult to enforce. It's very difficult to audit. Yet that is what we find in the international standard. Everybody knows, especially you, if we don't have a rules-based system, we will not have a clear legal basis for going after offenders. As long as managers treat standards as maximums, the most they have to do, they're going to love agreements in principle. I think we need to disregard this claim of superiority. Back to the Norwalk Agreement. I mentioned that it was signed in 2002. It was 50 days after a key event in our world. Sarbanes-Oxley passed unanimously on July 30, 2002. What people don't realize is it includes provisions to make FASB financially independent. It eliminated the need for corporate contributions. Section 109 empowers the SEC to approve FASB's budget, or whatever body is designated, and the PCAOB must fund it through a fee assessed on U.S. public companies. Some 50 days later, FASB members ignored that provision and bound themselves at the hip to the International Board and agreed to reach consensus. But the International Board depends on what? Contributions. And so it was an usurpation. I guess that's an erudite word. It took away the very safety that the Sarbanes Act was supposed to create. And again, FASB became vulnerable to charity. So again, something that sounds good turns out to be unsound. And this experiment has failed because it was doomed. The idea that the SEC could just flip a switch and embrace the International Board is completely misguided. The jurisdiction of the SEC is limited, first of all, to public companies. How many is that? We think somewhere around 20,000. Now, they have a lot of money, but nonetheless, it's limited to public. So we could not adopt IFR simply because the SEC did. The SEC's legislative mandate is to regulate the U.S. securities markets, not the world markets, and it is to regulate it for the protection and benefit of American citizens, not the world's citizens. So it's simply a question that the SEC has no jurisdiction. We also have the problem, and you're very aware of this, of how much GAAP is interwoven into tax codes at the state level, and also into how many contracts, literally millions and millions of them. It would be immensely costly to take GAAP out of our system and put IFRS in that place. Someone once told me, and I'll simply note off the record, and I quote, "Changing accounting standards would be almost as hard as going to the metric system." But listen to this. But at least we would all be better off if we did go metric. To go through something that dramatic, we better have dramatic results. Now, there's one more. And I put a teaser question: who would need to embrace whom? The real reason the SEC cannot embrace the International Board is that the International Board would never stand for it, contrary to what they say. I've always heard, be careful what you pray for, you might get it. Sarbanes Section 109, I mentioned, it relates to funding. What people seem to overlook, Section 108, requires whatever body designated by the Commission to issue accounting standards, it must have, and I quote, "the capacity to assist," end quote, the SEC in implementing Section 13B of the Securities Act. Among other things, this makes it clear that whatever board is chosen must then have the capability and willingness to work alongside the Commission to do what? To bring full and fair disclosure to the U.S. capital markets. They would also operate under the SEC's oversight. When you consider these things, I do not understand why people believe the U.S. needs to embrace the International Board. Indeed, what needs to happen is that the International Board has to embrace the SEC. I don't believe you've heard that before. Some people don't believe it. I recently received an email ad from an unnamed institute of CPAs. Part of the sales pitch was, quote, there are over 125 countries that either require or permit the use of IFRS. You have some insight into that claim. It goes on, quote, the SEC is poised to set a mandatory adoption date for publicly traded companies to implement IFRS in 2015 or 2016. And I'm sure that is great news and a complete surprise to the Commission. Some people just will not give up. Last week, the IFRS Foundation issued a response to the SEC's report, which basically said, no, there's not compelling evidence for us to adopt at this time. And the Foundation for the IFRS says, while acknowledging the challenges, the analysis conducted by the IFRS Foundation staff shows that there are no insurmountable obstacles for adoption of IFRS by the United States. Do you believe that? Come on. Have I been persuasive or not? I'm not arguing, I'm simply presenting facts. Do you think the International Board is ready to embrace the SEC? Yes or no? Okay. That to me is an insurmountable obstacle. They need to look inside. So I believe you can disregard this possibility. The only workable standard setting we have, solution we have, is the one that's already in place. FASB is strong, celebrating 40 years this year. IASB is strong elsewhere. We're strong in the U.S. Let's continue to touch base. Let's work together. But forget any idea that the International Board will come and rule you. Maybe someday a different board with a different structure, and on and on and on, in a different world in which people honor truth-telling in all ways, at all times, international standards make sense. That's not the world that I live in. And I live in an ivory tower, according to my critics. It's actually quite roomy. You should come see me sometime. Now, the second issue, and I'm glad that the next speech doesn't start till 10:45, right, Louise? Yes. Yes, okay, good. And I'll start reading every other page. This issue, the next one, has been around for a long time. 30 years ago, I was at FASB and everybody was running around and the expression was a big gap versus little gap. We have to be really careful about that. It might impact some of our friends from Japan. There was a Japanese member of the IASB who made that joke. It wasn't me. The origins of big gap, little gap, I believe are emotional. A longing for a simplicity that simply no longer exists. I wish it were simple, but it is no longer that way. There is way too much money involved, too many people. Simplicity is nothing that we should long for. What we need is usefulness. And that's what I come to lay as a title as we look at what used to be called standards overload, now called private company gap. And as you know, NASBA has been involved almost from the beginning. Billy Atkinson has been appointed chair of the Private Company Council. Billy, where are you? Oh, all right. Diane, you too. Good luck. Hope to see you in Norwalk in December. I hope that NASBA will join forces with them and lead the council to use the situation to bring about long-needed reforms. My encouragement is for, excuse me, all right, to make, I'm confused because it's got a different number down there than I've got, and I thought I was almost done. You only wish. This issue is important for you because it is an opportunity for you to do more good than you may have ever imagined. The risk is not doing enough. It's not doing enough. There are real problems, and they're created by deficient accounting standards, which are created by the existence of politics in the standard-setting system. And so, as I understand it, Council's first effort is going to be to identify as many places as possible in GAAP. Did you get that? As many places as possible in GAAP that could be changed to be more useful for private companies. That's absolutely the best place to start. We should approach that, however, with a different perspective. And I've put an academic word up there, paradigm. No, that does not mean 20 cents. Paradigm is a philosopher's word for an accepted worldview. Profound changes are going to come about whenever a paradigm shifts. For example, how simple was life before the iPhone? I won't embarrass anybody by asking how many of you have checked your email while I've been talking. Was that possible under the old paradigm? I about fell over. I woke up this morning and I said, oh my gosh, who won the World Series? Just because the Broncos were winning last night, I didn't watch. We do not like to be out of touch. That is a paradigm shift. We need a paradigm shift. Others have occurred that we don't like. International terrorism, for example, has made it necessary for us to remove various articles of clothing before we get on the plane. That used to happen only on executive jets. Just stay up front for the next hour and a half. The paradigm shift that we need, and I believe it's going to come, is that we will begin to address the needs of those who use private company financial statements. Not those who prepare them, not those who audit them, but those who use them. So I urge the council to put aside decades of politics and act to favor the public interest. Here we are in Disney. I spent the day, most of the day yesterday in Epcot. Not my first time there, yet they still extracted a Benjamin from me to get in. And I've been with my family, that would have taken several more Benjamins to get me out. They know what they're doing. Who are they linked into? In fact, they're speaking later today at lunch, aren't they? Who are they linked into? Their customers. Who are we linked into when we set standards? Well, auditors, managers. We're not linked to the users. We don't even know what they need. We're more concerned about what we produce. That was a profound statement. I want you to burn that one in. Some 25, 30 years ago, Europeans, Japanese, took hold of our auto industry by the TQM and shook it. Total quality management. They paid attention to what users need, but not what workers on the line need, not what kind of stuff comes rolling off the line. What would it mean if we changed to users in the private company environment? And Billy shared this thought with me, and it has stayed with me ever since. The area of private company standard setting is especially ripe, listen to this, especially ripe for user orientation. Why? Because managers know the users. Am I right? They do business with them. They have done business. They've loaned money and borrowed together. They've taken investments. They know each other. There's much less distance. There's a long-standing personal relationship between the two of them, or more, in a history that makes them feel good. So financial reporting in that context is more than likely to occur where trust has been established. And where trust has been established and it's broken, there's much more damage done than where trust never existed at all. Do you hear me? This is an area ripe for improvement, to build on the trust that is there, to tell the truth, the whole truth, and nothing but the truth. You heard about the witness in court. Do you swear to tell the truth, the whole truth, nothing but the truth? Is 2 out of 3 good enough? But that has been our attitude. We don't tell the whole truth, and we embrace something called finish the sentence, off balance sheet financing. We think that is perfectly acceptable and smart. I'm telling you, it destroys trust. So where are these statements used? It's quite clear that financial statements in the private company setting are used in these 2 areas. First of all, that is assessing a company's creditworthiness. To meet that objective, users must be provided with useful information about cash flow. Furthermore, they need information about assets that are used as collateral or could be used as collateral or could be liquidated to produce cash. They also need to understand completely all existing obligations, whether they are on or off the balance sheet. Therefore, we should have direct method for private companies for reporting operating cash flow and mark all assets. Ready for this? This podium's pretty strong and I might have to duck, but mark all assets and liabilities to market. How else will we know whether an asset is suitable collateral if we don't know what it's worth? Off-balance sheet financing must be eliminated. If we don't do all of these things, the reports will not be useful. What about firm value? Just about every private company manager I know or owner is either looking to buy another one or to sell the one they got. In order to enter into negotiations to buy or sell, you need financial statements that tell the truth, the whole truth, and nothing but the truth. I was talking to a practitioner on private company, and he said, if we go in the direction of simplifying the financial statements, we'll be back to negotiating deals over lunch on the back of an envelope or a paper napkin, because the financial statements will not be useful. What is needed here, again, direct method. None of the bass-backwards approach that we have, but direct method. Where does your cash come from, and what are you spending it on? Not what are you not spending it on. Off-balance sheet financing's got to be eliminated. Market-based information, again, for assets and liabilities. After all, if you're going to buy a company, you're buying what? It's assets. You're assuming it's liabilities. You need to know what they're worth. Remember, user. Quit saying, how do you get it? How do you get it? Look what it took Disney to put Epcot together. It wasn't cheap. A third purpose, didn't make it onto the slide, is simply that information will be good for management. And as I've led you to see, traditional GAAP statements will not serve any of those three functions? If that is the case, what are they for? What purpose do they serve? It's not going to be enough to tweak existing standards. Furthermore, and I highlighted this one, any efforts to curtail the amount of reported information would be going in exactly the wrong direction. Remember, the goal is to build and maintain trust. I suspect, on the other hand, that advocates for private company GAAP are looking for a way to reduce the costs of preparing financial reports. I don't know why I say suspect, I know they are. And I would redefine the issue. The search must not be for inexpensive financial statements, but for useful ones. So here is a shocking implication. If indeed there is a thorough and objective evaluation of GAAP, it's going to show that all of it is cleverly rigged, PEEP, POOP, YWAP, and other variations on it. Superficial modifications will not be enough. And if we don't pursue the goal of usefulness, why should we bother? I'm especially pleased to read what Billy said last week at the AICPA Council, in which he stated his intent to evaluate all of GAAP. He quoted in the Journal of Accountancy, quote, "If we do have fixes, we should first evaluate the fixes from the standpoint of all users, not just private company users." Thank you, Billy, for that. If the council proceeds, they will need to ask some new questions. Here's one of them. Why are we still doing today what came into common practice before computers existed? Why are we still doing today what we did when Queen Victoria had just ascended to her throne? Why do managers want to reduce the cost to prepare their statements if cutting corners will increase their capital costs and decrease their firm's value? And my favorite, of course, is why are impaired market values below book considered to be reliable, but those above book are not? These are bold questions. I've selected for you what happened. All right, I'm going to. Did we miss a slide, guys? Is there? Okay, well, I had one and I'm going to read it. I think what they did was put up the wrong one, but that's okay. Here are some places where accounting practice could be improved. Cash balance, cash flow statement, accounts receivable and credit sales, inventory, cost of goods sold, investments in equity and debt securities, property assets and what I call depreciation, intangible assets of all kinds, other financial instruments, consolidated financial statements, off-balance sheets financing, income tax expense and deferred balance sheet items, accounts payable, long-term debt, convertible debt, defined benefit pension, stock-based compensation, shareholders' equity, preferred stock, classifications on balance sheets, income measurement and presentation, comprehensive income and quarterly reporting, which became the standard in 1933. Think about that. Once that list is exhausted, I can come up with a few more things. Every one of those things is seriously flawed when it comes to providing useful information. It's seriously broken, which means we need serious reform. The council can kickstart, get things going, and that's good. But as Billy has confirmed, it's a natural extension to question public GAAP as well. It's clear that this is going to lead to a serious evaluation of public practice as well. And I will now note, keep your tomatoes, A move to put users first is not what the supporters of the private company movement had in mind. That is not what they had in mind. And I've got some points here. First of all, the composition of the Blue Ribbon panel, the backgrounds of respondents to requests for comments, and also the membership of the council itself. If we are going to have reform, there's going to need to be substantial representation of what it is that users need so that the public interest is served. As for the original panel, 70%, more than 70%, nearly 80% of its 18 members were CPAs, CFOs, and other managers. There were only 2 users. There was 1 seat obligatory for a professor and another for a regulator, I believe Terry Pauly of the FAF. This mix does not reflect a paradigm that puts users' needs at the top. Bruce Pounder wrote in CFO magazine critique of responses that were received by the panel to its proposal. 103 of those responses came from CPA practitioners and state societies. Only 4 came from users and business owners. I don't imagine that their requests for additional information overwhelmed the 103. The composition of responses to later requests was terribly skewed toward CPAs. That happened because thousands were able to simply click on a link, authorize the AICPA to send a prefab letter to the foundation in their name. While perfectly legal, this gambit was subject to criticism. Paul Bonson and I described it as unwise because it's ineffective and perhaps even illegitimate. It should suggest, however, for the point in hand, there was no intent to advance the public interest in having more useful financial reports, according to the paradigm that users come first. When I saw the composition of the council, I flinched. 4 CPAs, 4 managers, but 2 users. But I've become to know Billy, and I'm very impressed with his commitment to do a great job. So, I hope the hunt for better standards will be received by everyone at NASBA as a major opportunity. This is a perfect time to reach higher than the last 9 generations who have stuck with depreciation. We can have meaningful reform. Now, when I got up this morning, USA Today was on my doorstep. I looked at it because I wanted to be sure of the date. It said 2012. We're in the 12th year of the 21st century. I'm convinced, I'm confident it's time to give up on 20th century solutions to our problems. We don't even know what the problems are today because we're stuck solving the old ones. It's time to banish 19th century practices. Every other part of our economy is innovated beyond our imagination in the last 15 to 25 years. Yet we are somehow trying to hold on to what our grandfathers and great-grandfathers did. It is time for us to move on and become relevant in this information age. There are a couple of other issues that I'm running very short of time. Just mentioned briefly where we see politics interfering as defined previously. A lot has been said and will be said about auditor rotation. We should not be surprised that auditors and managers virtually unanimously oppose this proposal because it's different. But if we look at it users first and go back to the green arrow, a user's got to be asking, now who pays the auditor? Now we've learned to dismiss that question, but users have not, so we should deal with it. And rotation is an illustration of it coming forward. Another point where I believe politics have entered in is a movement on the part of some at the AICPA to create a non-American institute of non-CPAs through a merger with an international organization. I'm sure there are reasons that they believe are good, and they're entitled to them. But I think it should be an open and free discussion, and I'm sure it will be. I know that our views, Paul's and my view on that point, are controversial, and I hope it will be discussed. So, at last, no one is more happier to see that slide than I. Remember, I am an introvert. First of all, beware all politicians, especially if you are one. Truth is always the primary victim when politics take over. Yet what is it that we as accountants, what is it that is our stock in trade? Truth. If people cannot depend upon us to tell the truth and report the truth, then we have no service to provide. So when we engage in political behavior, we have ripped the guts out of our business model. Do you hear me? I said business model. What does it do to our ethical model? Remember, compliance with GAAP, it ain't necessarily unethical. Let's try that again. Compliance with GAAP is necessarily ethical. What did I say? Compliance with GAAP is not necessarily ethical. I got it out. I'm tired. Second, you are a model. You're serving without pay. You're serving long hours. You're dealing with stinky issues. I've been there on an Institute Ethics Committee. I also worked with the Division of Enforcement at the SEC when I was on that staff. If you're not independent and you're not ethical yourself, you're in no position to judge others. So I'm calling on you to hold tight to those things. It's going to take a lot of integrity. It's going to take a lot of fortitude. That's true for all of us as we try to deal with decade upon decade of political mistakes. You are the front line. You're at the point of the sword, the tip of the spear. You are the defense for the public interest against incessant and unacceptable push to promote self-interest of managers, auditors, and others. Third, when someone, and that includes me, when someone claims that something is true, ask yourself why they want you to believe it is true. They probably have got their hand in your pocket. Test them. If you get an accurate answer of what their motives are, then that will help you deal with what they're claiming is going to be good for you. Of course, now I thank you, Mark, and others who made the mistake of inviting me to speak. I figured I would go over by half an hour, so actually I'm done early. I also know that that was the end of the question and answer period.
Oh no, you're doing fine.
Okay. I thank you. Wait, I have 20 more pages.
Oh no, if you'll stay there, if any folks have any questions or comments, If y'all could approach the microphone, as well as if you want to write a question down and forward it, the NASBA staff will come up and pick it up. If not, I do have a question, or if while y'all try to
start the flood.
Absorb what Paul has said. Well, first of all, a soft one, which is, tell us a little bit about your co-columnist, Paul Bohanson, and do y'all always agree?
Bonson?
Him too.
Yeah. It's interesting. One of us is a liberal Democrat, and the other a very conservative Republican. We don't talk politics. Background, Paul was one of my PhD students when I taught at the University of Utah. I asked him, 20 years ago to join with me in a revision of a book about the FASB. And he was more than willing to do that. And then we began to write articles. I wrote my column for the first 4 years with Ed Katz at Penn State. And we got to 100, Ed said, I quit. It was back in those days, once every 2 weeks, we had to put a column together. And Bonson was a natural because we were writing books and other things together. Do we disagree? Sure we do. Do we argue? No. I've had co-authors that I couldn't go 10 minutes without arguing with. Paul and I have worked together for more than 20 years, and we've never, ever had an argument. We disagree, and we talk it through. We always find a better solution than either one of us had before. I hoped he would be here today. He was going to fly down because he wanted to hear this because he's been working with me on it. Probably would have done a better job delivering it. But he is a great guy, very, very dependable and a real leader, very unsung. And he loves the Boise State Broncos and the blue field. I get bilious when I look at that field.
The other question I had was, what would be a reasonable time frame in your mind for private company standards reform?
What was the last word?
Reform.
Reform. I didn't understand y'all. I gave up talking like that when I left Texas, but I can bring it back in a second. I think it's probably going to take decades. It's not going to take that long to get started, but when you heard my list, I wish it had been up there because it's very intimidating. There's a lot of things to fix. I think there are simpler solutions. What a wicked web we weave when first we set out to deceive, Sir Walter Scott said. And I think in financial reporting we have woven some very wicked webs because we didn't want to tell people that somebody might have had a gain, more than willing to say they had a loss. But wait, wouldn't you measure the gain the same way you measured the loss? But that's different. And we coined the word conservative, when actually we were being CYA. We were protecting ourselves, not the public. Consolidations is a place that I think is ripe. We have moved a great distance to bring everything onto the financial statements of the acquired company at market, even recognizing a gain on purchase. Phenomenal move. But why would we take that pristine information and mix it with the old garbage that the acquired company has? So new basis makes sense. Leases, put every one of them on, even if they last less than 12 months. It was just a week or two ago, a column came out where we said the materiality decision should not be based on each lease individually, but on the portfolio of leases. Because if you say any lease 12 months or less, management will go out and write, and auditors will help them write leases that are 11 months and 29 days. What is the portfolio? So there are complicated problems, but I think easy solutions. Easier. So time frame, decades. But let's get started.
What if just you and Paul did it in your ivory tower? How long would it take y'all?
We've already done it.
Okay. Any questions or any comments for Paul at this moment?
I'm really very friendly. Yeah, I've had all my shots. I do not bite. I'd say my dog loves me, but I don't have a dog. I'm going to go beyond, because you kind of opened the door a little bit, and I want to encourage questions here, in that I have a reputation of being mean. That's not my character. It's just an illustration of the passion I have for truth, both as an accountant and as a human being on this earth for a limited period of time. I don't hate anybody, and I'm not afraid of anybody because of what I've already been through.
All right. Thank you, Paul. And he'll be here if anyone wants to approach him at the stage.